Hello and welcome back. In this video, I'll explain the process of foreign currency valuation. We will also perform a system demo. Also, we'll check configuration steps required to activate foreign currency valuation in SAP system here. Okay. So basically, foreign currency valuation is a periodic activity. Okay, we always perform foreign currency valuation program at the month end actually. Okay, so that we can calculate unrealized gain or loss here. Okay, so whenever we calculate and we post unrealized gain or loss, okay, so system always reverse that postings in the next month, because this gain and loss calculation is just for a reporting purpose. So whenever we have to create our financial statement system, we have to always show the financial position considering this gain or loss on this vendor or the customer open line items here. Okay, so now this foreign currency valuation with this FAGL FCV will be called as a classic foreign currency valuation. So why I'm saying classic foreign currency valuation, because from S4 HANA 2022, okay, there is a new feature introduced by SAP called as advanced foreign currency valuation. So the advanced foreign currency valuation, as I said, it's introduced from S4 HANA 2022 on-premise and cloud solutions, which is very simplified solution in terms of configuration as well as like process execution. Input screen and also configurations are very simplified with this new process. I have already created one video on this advanced foreign currency valuation process. Maybe you can go through that. Also, I have created LinkedIn blog and SAP blogs for that with a detailed explanation and like comparison between classic and advanced foreign currency valuation. Maybe you can go through that. I will share the link in comment box. Now coming to the classic or the current foreign currency valuation. So with the program FAGL FCV, which line item system considers for foreign currency valuation? So system always consider this vendor, customer or GL open items, okay, which are managed in foreign currency, okay, with this foreign currency valuation. In addition to this, other general ledger balance sheet accounts which are managed in foreign currency but not flagged as open item management. Now let us understand what is foreign currency gain or loss. So foreign currency gain or loss occurs when company buys or sell goods and services in a foreign currency. So meaning whenever there is a currency different than your local currency. Assume your company code has currency INR and you are buying something from US with the US dollar. In that case, assume that there is a fluctuations in US dollar. So what are the fluctuations that will happen during your invoice postings? Okay, at the time of invoice and when you do valuations, actually these fluctuations will be accounted as a gain or loss. Okay, so this is what or this is how basically foreign currency gain or loss is calculated here in system, and we have to always account this gain and loss while we prepare financial statements here. Now there are two types of foreign currency gain or loss here. Okay, as I mentioned here, we classify the type of foreign currency gain or loss, realized and unrealized gain and loss. So let us understand what is realized and what is unrealized. So realized gain or loss, so these losses are on transaction that have been completed. So completed means what? So this gain or loss will be accounted or will be realized or will be considered as a realized at the time of payment or collection for supplier or completion supplier or customer is completed. Meaning now you have posted one invoice with US dollar. Okay, now you are making a payment to vendor with US dollar here. So whatever the fluctuations will be there at the time of payment, okay, that whatever the fluctuations will be there, whether it's gain or loss, will be accounted as a realized gains. Meaning, in short, at the time of payment or at the time of receipt or at the time of collection, this realized gain or loss will be considered here or will be accounted. Now, what is unrealized gain or loss? So when we book only those invoices, okay, like for example, on 1st of March, you have booked invoice, okay, in US dollar, and now you are performing foreign currency valuation on 31st March. Now on 31st March, this invoice is not paid, okay, means that invoice is still open, okay. On those open items, what are the fluctuations will happen? So fluctuations will happen, how it will happen? On 1st of April, on 1st of March, you have posted invoice at, for example, US dollar 70, and now at the time of this valuation, now the rate is fluctuate, like for example 75. So what is the difference is there for 70 minus 75 will be considered here as a unrealized gain or loss here. Okay, so this way basically system calculate realized gain or loss. To summarize, realized gain or loss will be calculated at the time of payment or collection, and unrealized gain or loss will be calculated through foreign currency valuation program at the month end. Only condition is that realized gain or loss will be considered at the time of payment or collection, and unrealized gain or loss will be accounted at the time of these open item valuations here. Now let us understand this gain or loss using one example here. Now this example is for foreign currency exchange loss here. Now for example, at the time of invoice, exchange rate was 70 per US dollar. Okay, now my company code currency is INR, so that way my USD US currency is my foreign currency. Now which got increased to 75 at the time of payment, which result loss of 5,000. So this is realized gain or loss example. Okay, now because of that, company needs to pay 5,000 extra due to increase in exchange rate. Now you see here, on 1st of August, invoice was posted with US dollar. This is document currency 1000 with exchange rate 70. So 70,000 in local currency, which got increased to 75. Now the local currency becomes 75. Because of that, this loss occurred as 5,000. So this is realized gain. Now assume this invoice is not paid. In that case, this will be unrealized loss will be considered here. Okay. Now foreign currency exchange gain. So what happened at the time of invoice posting, the exchange rate was 75, which decreased to 73 here, means 2000 will be gain here in this case. Now this is realized because it's considered at the time of payment. Assume if the invoice is not paid, in that case this will be considered as a unrealized gain here. Okay, now let us understand accounting entries which are getting posted at the time of this foreign currency valuation here. So realized gain and loss will be posted, as I said, during this payment or collection. Now that case, realized gain or realized exchange loss will be debited. Your vendor account will be debited in this case, and bank account will be created. This is payment entry. Now in case of gain, your vendor account will be debited, blank clearing account will be created, and realized exchange rate account will be credited here. Okay, as we always know, loss will be debited and gain will be credited here. So these are the payment entries. It will be same as it is. Now when we do foreign currency valuation, that time, as I said, unrealized gain or loss will be calculated here. Now when there are open item, okay, GL which are configured as or which are created as a open item basis, that time how it will be posted. Okay, loss will be debited and balance sheet adjustment account will be created here. Now you'll say from where this balance sheet adjustment account is coming here. So basically we have to configure balance sheet adjustment account in our foreign currency GL account determination here. Okay, so both GL, this gain or loss, and balance sheet adjustment account we have to configure here. Now since we cannot post directly to a reconciliation account, this balance sheet adjustment account will be used here. Now as I said, they're in the advanced foreign currency valuation with new feature, you'll be posting to directly to the reconciliation account and not to the balance sheet GL account. This is why I said that it's simplified process. Okay, now with this advanced foreign currency valuation, there is no need to assign balance sheet adjustment account. Okay, now when you are doing valuation for these non-open items GL account, and if it is gain, so what entries will be posted here? Let us see here, gain or loss entries here. Now if it is loss, then in that case unrealized exchange loss will be debited and GL account which we are evaluating will be created here. Now for the gain, the GL account will be debited which we are evaluating, and our gain account will be created here. Okay, so this is how basically accounting entries are getting posted when we are posting this foreign currency valuation. So these entries are related to foreign currency valuation. Okay, when we perform this FAGL FCV, these entries will be posted and immediately it will be reversed on next month first date here, right? And these are during payment postings actually. Okay, prerequisite, basically these prerequisites are nothing but the configurations that we have to do here. One thing we have to notice, basically, see, the thing is how system is calculating foreign currency gain or loss is because of exchange rate fluctuations. And where we maintain the exchange rate is here. We maintain exchange rate in transaction code OB08. We maintain exchange rates here. Okay, and where you can find the configuration path. So under financial accounting, under valuate, and then foreign currency valuation, you will find this configuration of this foreign currency valuation. So let us see this configuration in system. So go to IMG, then financial accounting, then general ledger accounting, then periodic posting. Go to valuate. Then first thing is we have to define valuation method here. Okay, you can have different valuation method considering your ledgers. So in current case I'm only considering leading ledger here, so my valuation method is basically IFRS, which I have copied to here with BEL here. Okay, we always consider this always valuate. So what exactly the valuation method contains here? One thing is valuation procedure, I mean whether it's lowest principal or always valuate or revaluate only. Further, document type that we have to consider here, then exchange rate type. These are the main thing that we always consider here in the valuation method. Then we have to always mention from which FY start date we have to consider this valuation method. Okay, now I have created this valuation method. Then we have to define valuation areas here. Okay, now we have defined these valuation areas where we will be using this valuation method. Here we can define the currency type. You can even define additional currency types also here. Currently I have only defined this 10. 10 is nothing but company code currency here. Then we have to do the assignment of accounting principle to ledger group. So my my company code using accounting principle as IFRS, which has ledger as 0L here. So where you can find this ledger? So we have to go to fins underscore ledger here in S4HANA systems. The fins underscore ledger, select this leading ledger, then go to company code specific settings here. Select your company code, go to accounting principle. Here you can see IFRS is my accounting principle that I'm considering here for the valuation. Okay, now assign valuation areas and accounting principle. So we created a valuation area as B1 here. Okay, and then my accounting principle is IFRS here. Okay, which is linked to leading ledger, which is 0L. Now I have not activated delta logic here. Okay, in this case system will not reverse your valuations. Instead system will post only delta values here. Okay, that I have not activated. In my case system will reverse valuation on next day. Now here prepare automatic posting for foreign currency valuation. Here we define GL accounts. So under this one, under KDF we define GL account. Here we have to mention our chart of account. So here exchange rate difference is realized. So realized, as I said, during payment posting or the collection posting, these GL accounts will be picked from here. Okay, and valuation, this month end valuation, this GL will be picked. One is for loss, another is for gain, and next is balance sheet adjustment account. As I said, we do not post directly to reconciliation account with this classic foreign currency valuation, so it will be posted to the balance sheet adjustment account. Okay, so this configuration we need for foreign currency valuation. So let us understand this process with one example here. So now let me check first exchange rate here. I have also posted examples for this realized gain and loss in another video. Maybe you can go through that also. Do let me know if you have any concerns. So let me check for USD to INR here. Oh, sorry, not exchange rate. So I have to consider exchange rate type. Instead exchange rate here, let me cancel this. Exchange rate type I have to consider, and from currency to currency we always consider exchange rate type M here, which is standard, which will be used for all postings. Okay, now here I have to maintain exchange rate here. 1 second. So I'll be maintaining exchange rate for current month. Let's say I have maintained as 90 here at the month start, and then at month end on 31st I'm considering this as 95. So the loss will be calculated here. Okay, yeah, and save this. Now let us post one example with foreign currency. I'm posting vendor invoice without reference to PO. I'm posting on 1st of March. Okay, I'm changing here currency to USD here. Okay, yeah, you see here this local currency is calculated to 90,000 because this exchange rate we maintain as 90 there, right? Now you see here, if you want to see in local currency, you see here document currency is USD, which is 1000, exchange rate is 90 applied here, right? And month end on 31st we have maintained 95 there. Now let us post this document display. Now go to our program FAGL FCV underscore FCV. Okay, company code is 1000. My valuation area is, I guess, B1. Let me check this. B1. So key date I'm changing to 31st March. Okay, you see here this posting parameters. So I have mentioned as determine automatically. I mean, this is default setting. So you can even change that. If you do not click on determine automatically, you'll be able to change that. Now reversal posting will be happen on 1st of April here. Okay. Now open item sub ledger. Okay, GL accounts, GL account balances, and other technical settings are also there. Now I'm running this program in test run. Now sub ledger I have to evaluate vendors here. I'm just restricting my vendor code here, which is this 5 all zeros. This is supplier code. Now let us execute in this test run and see the results now. Now program is executed. You can see this vendor account we have evaluated here. This was foreign currency amount or the document currency amount. Okay, this was local currency amount. Now you see here revaluation rate. So revaluation rate from where it came is basically it came from the 31st of March. Okay, on 31st March it's 95, right? And during the accounting document posting, this invoice posting, it was 90 here. You see here difference is 5000 here, right? Now you see postings. So these postings will be happen once we run this program in update mode. Okay, two things will happen here. One is valuation document will be posted, and yeah, you see here document will be posted on 31st March. Okay, and same will be reverse. So reverse posting will happen on 1st of April here. You see which GL accounts will be used here. See, this is lost GL account, this is balance sheet adjustment account, and now it will be reverse here on. Okay, this is 5000. So 5000, as I said, invoice at the time of invoice it was 90, during revaluation on 31st March it's 95. That's why 5000 will be the difference here. 1000 into 5, 5000 will be the difference posting. Now let us go back here. Now let us execute in update run. Okay, if you want, in case you want to reverse the valuation, you can even reset the valuation and you can re-perform it. You can change your exchange rate in meantime, and you can even do the re-execution here. Now I have clicked on update run. Let us execute this. Okay, there is one error message. Let me see that. Oh, for my company code, this advanced foreign currency valuation is active, so I cannot run this again here. So one thing is here, whenever you activate this foreign currency valuation for your company code, you'll not be able to run this program parallelly here. Either you have to run advanced foreign currency valuation or you have to go with classic foreign currency valuation. Okay, let me see if there is any another company code I have with this classic one. Yeah, because of this advanced foreign currency valuation activated for local ledger, I have configured the settings considering my local ledger. Okay, so basically advanced foreign currency valuation is activated for leading ledger, sorry, and now I have configured another valuation area with local ledger. Okay, and all the details are remain same here. Okay, now I'm executing it. Okay, you see this is exactly same, only ledgers I have configured differently. You see here these two documents will be posted. Let us go back and post this with the update run, execute. Now you see here postings are completed here. Now let us see what is the posting here. Now click on posting. You see here there are two documents are posted here. Okay, now let me open this in posted. Yeah, this one, just double click on this document and click OK here. You see here exchange rate difference loss is debited here. Okay, you won't see any amount there in the document currency. I'll show you how to do that. Just click on display currency, go to local currency. Here you will see the differences. Now you see, okay, now exchange rate loss is basically created here and your adjustment account, okay, which is debited here. Okay, now let us go back because it's reverse posting now with the normal valuation posting. Okay, now you'll see that exchange rate loss account is debited. Yeah, you see here loss account is debited. Now go to display currency, local gap. Yeah, loss is debited and your exchange rate, this balance sheet adjustment account basically, which is credited here. Okay, earlier was the reversal document. This is posting document, posting of valuation here. You can see it here. Okay, now let us go back from here. Okay, so basically this is how we post this foreign currency valuation. Assume you have to reset the valuation, just click on this reset valuation. You can do this in test run, execute. Okay, now this valuation will be reset here. Now click on update run, execute. Okay, now this is reset here. You see the postings here. Okay, now if I have to change my exchange rate, since we have reset the valuation, right, so we let us try by changing the exchange rate here. Okay, exchange rate type from currency to currency. Okay, this is EM from USD to INR. Select this. Okay, on 31st let's just assume that this is 85 and now let us see results here. Okay, now let us execute in test run, remove this reset. Okay, fine, we have already selected this vendor. Now execute this. Okay, you see here now 85 and 90 was when we posted invoice and 85 is used when we do revaluation. Now let us click on update run and execute. You see here document is posted. Let us see the posting here. This is reversal. Let us first see this valuation posting. You see here gain is posted because now we have reduced that exchange rate, right? It decreased. Now see local currency here, you'll see 5,000 difference here. Okay, now this this one balance sheet adjustment account is debited and your gain account is created here, right? And reversal will be again here. In the reversal your gain is debited and your this one adjustment account is created here. You have to always see in local currency. You will not find any differences in foreign currency. Okay, okay, so this is how we do basically foreign currency valuation. To see realize one, I mean realize one, as I said, it happened when we do posting or the payment posting or the collection. I've already explained this process in another video. Maybe you check that video. Okay, thanks for watching this video. I hope this is helpful.